Hi, welcome to the Market Alert for Tuesday, the 10th of December 2019. So stocks slide as bond yields, dollar erase Friday job spike. Well, not all of it, but certainly some weakness around. There was no news yesterday, no Trump tweets, nothing about trade talks. So the market drifted lower, as we can see in the daily chart of the Dow here, coming back below the 76% retracement. But nothing to be too concerned about at this point, as the market moved lower, but not on any great sort of volume compared to the day before. And in the intraday, the market was undecided on what it really wanted to do. Even in the pre-market session, it was just hugging the 200 MA. It then broke through, made no headway whatsoever. We had a 76% retracement here from the high to this low. You can see, let me just redo this, take the extend right out so it stays on the chart, right on the psychological level there of 28,000 resistance for the market, and then prices move lower, and then again they came back and we had another 76% retracement, and then eventually the market started to break down to the downside and drifted lower, came back to the 50 bar, and then headed towards the DP level before a bit of a rally before the end of the session. But just prior to the close, you see the market then sail to the downside, going through the DP level. So the weakness in the market yesterday, profit taking from Friday. At the moment, there's some brilliant videos around by the Money GPS and one or two others about the debt and how it's increasing, and the repo rates are increasing on the overnight, the lack of liquidity in the banking sector, none of which is being reported by the mainstream media. So I think when we get into the new year, we're going to see a repetition of 2018 and some fireworks. Certainly the volatility is indicating this as well. Interestingly enough, we see a sharp rise back in the implied volatility yesterday, after the market showed a drop down to 11.94, just under 12. On Monday, we shot straight back, which in the pictorial view shows amber, as we're once again above the 20 MA in the volatility, but at the moment we're still holding above the prices there at the 20 bar MA. So again, it looks like we're on the cusp of a potential correction coming back into this market, given that we saw the rise on Friday, but don't forget it wasn't backed by any sort of significant volume either. So like I say, they're doing their best to keep this market on the high, and will try and move it to the upside as much as they can. But at some point that is going to stop, and of course once it does, then it will be like a house of cards. But certainly something going on in the background in the banking sector that is being hidden from the mainstream at the moment. Meanwhile, 10-year 3-month yields 0.29, still holding there quite nicely, as well as we discussed in yesterday's market alert. Meanwhile, Bitcoin, well, as you can see from this, really quiet yesterday, apart from the one spike. Then it moved lower, and since then has become sideways again, so not a lot to report here. You can see this now clearly defined in the daily chart, and in between these two sort of support and resistance areas, the highs and lows, you can see even smaller price bars there. It's just the way this market plays, and at the moment it's not playing, it's just very, very quiet there. So that's it for this one. There is a bit of news today. We've got just German news out at 10 a.m. for the ZEW Economic Sentiment. That's out forecast at 1.1 minus 2.1 previous. So we'll see. But otherwise, it's the market's relying on trade deal rumours and Trump tweets. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.